The S&P 500 finished the week up 0.59%. The Nasdaq led again, up 1.51%. The Dow dipped 0.07%, and the Russell 2000 edged up 0.23%. New all-time highs were set on Thursday for both the S&P and the Nasdaq, powered by tech, software, and earnings optimism. Leaders this week: big tech, China tech, online brokers, software, semis, and airlines. Tesla jumped 5.2%. Nvidia added 4.5%. And TSMC rose 4.3% after strong AI-linked earnings. The laggards: managed care, home builders, credit cards, energy, chemicals, and metals. Macro check: the market ended higher even as Fed rate cut expectations dropped. Markets now pricing in just 42 basis points of cuts this year, down 50 basis points from last week. But bond yields stabilized, and that gave stocks some breathing room. The 30-year finished near 5%. The dollar climbed 0.6%, gold slipped 0.2%, and crude oil fell 1.6%, snapping a two-week win streak. On the policy front, Trump escalated pressure on the Fed this week with reports that officials discussed firing Chair Powell. Trump denied it, but also said maybe if there was cause. Meanwhile, Fed Governor Waller backed the July cut, and Daly echoed support for easing if inflation stays cool. Tariff risks are heating up. UBS says the markets are underpricing the threat, and the August 1st deadline for a 30 to 35% tariffs on top trading partners is still in play. Trump also floated 40% tariffs for non-cooperating countries and reiterated minimum tariffs of 15 to 20% in any EU deal. Wells Fargo says these tariffs are almost a certainty in the near term and warned investors to watch margins and earnings for signs of cost pass-through. But data was strong across the board. Retail sales, jobless claims, industrial production, permits, and both regional Fed surveys all beat expectations. Michigan consumer sentiment came in hot, with inflation expectations falling but still above December levels. Corporate earnings kicked off with mixed banks and strong tech. Pepsi rose 5.9%. Netflix was volatile on margin guidance. United Airlines jumped 5.2% on a stronger outlook. And Nvidia rallied on news it can resume AI chip exports to China. Apple said it'll invest $500 million in MP materials. Uber dropped $200 million into Lucid to launch a robo-taxi fleet. And rumors swirled around a Union Pacific Norfolk deal. What to watch next week? Earnings ramp up big time. Monday, Verizon, NXP. Tuesday, GM, Coke, Lockheed, Capital One, Texas Instruments. Wednesday, Google, Tesla, IBM, Chipotle. Thursday, Blackstone, Honeywell, LUV, UMP. Friday, HCA. On the macro calendar, Richmond Fed Index Monday, existing home sales Tuesday, flash PMIs Wednesday, new home sales Wednesday, and durable goods Thursday. So what does this mean for your portfolio? Well, markets are riding strong earnings and economic momentum, but tariffs are coming, rate cuts are shrinking, and sentiment is hot. We're calling for you to trim down some of these overvalued names like industrials, consumer discretionary, and small cap, because there may be a better entry point coming later this year. This rally still has fuel, but form matters more than ever. So stay alert, watch guidance, and don't let FOMO cloud the data. Stay disciplined, stay focused, stay profitable. I'll see you Monday morning for your pre-market game plan. God bless.